afternoon and welcome to Biztech Asian Midday Market Watch. I'm Samantha Voon and it's Tuesday, the 30th of April, and our guest today is Glenn Yin, Head of Research and Analyst at AETOS Capital Group, coming to us from Australia. Glenn, good afternoon.
Good afternoon to you, Sam.
Good to see you again.
Thank you for having me.
Okay, so first of all, let's check in on the Asian stock markets. All right, so we have a mixed bag here today. The Japan Nikkei 225 up 1.07%, and the Shanghai Composite up down 0.17%. The Hong Kong Hang Seng up 0.20%. The Australian ASX 200 up 0.21%. The South Korean Kospi up 0.63%, and the Singapore STI up 0.38%, and in Kuala Lumpur, the KLCI is down 0.2%. Glenn, what do you make of today's performance?
Well, Sam, it looks pretty surprising to me because from experience, we're having like a data-heavy week and lots of decisions to be released this week. And normally markets react in a very cautious way. So things go up and down a little bit, sideways a bit more until the bombs drop. So we are very surprised to see most of things are in green, and that's good for the bullish investors.
Yeah, and I mean, we saw some interesting movements with the yen, right? So it sought against other currencies yesterday after previously sliding down to the lower side of the 160 per dollar. And this sparked speculations of potential currency intervention by the BoJ. What happened there, Glenn? Share with us your insight.
Yes, Sam. Very, very interesting, and it's a much needed surprise for financial markets after the Japanese yen collapsed to its lowest level since 1990, and it was absolutely headed towards the troughs in 87 during the last decade. Look, we won't know if it was done by the BOJ or the Ministry of Finance until end of May when they release their reports, but chances are, yes, they did it because it was a public holiday and the massive volatility in there was a dead giveaway. So the dollar yen pair, it remained has been remaining the central focus for currency markets since BOJ carried out its first hike in 70 years this March. We did forecast this historical move in Q4 last year as the return of precious inflation and the broad-based rise in wage had finally completed the puzzle, creating what's known as the wage price spiral, promoting markets to price in hikes and a potentially stronger yen. But the problem is, while the hike was historical, BOJ's rhetoric and the outlook was, were rather dovish. The same old saying of keeping things loose, a loose monetary policy, they did very little to boost the yen. But that's not the worst. And we saw USD's bullish return as US inflation ticked higher, kept rising, and markets started to lose their faith in rate cuts from the Fed this year. And that's why we saw the dollar yen pair pushing towards 160 on Monday, and that was a hard borderline for Japan, hence the rapid fire intervention from BOJ suspected. We saw around 550 pips drop in the first hour, followed by another 280 pips also drop in the next 2 hours, making a total of more than 820 pips. So massive by any standards, or like with the way you put it, mammoth intervention. That is, very graphical, and that was very heavyweight. So now the question for currency trader is this: will the BOJ continue to intervene if the greenback regains its strength after the FOMC this week? And don't forget, we also have the non-farm payroll the day after, with markets expecting a moderate cooling in the jobs market. If so, is the BOJ still willing to purchase more yen from the market to propel its currency and to consume its USD reserve, or will this simply become another opportunity for USD bulls to buy the dip?
Yeah, so with Fed cuts probably dropping to a low single digit until September, how could the Fed press conference play out this time?
Yes, Sam. Great question. This naturally leads us to the next heavyweight event of the week, or should we say events, plural, as we do have the Fed decision on Thursday and non-farm payroll on Friday. The decision itself is unlikely to cause much drama, as markets are only pricing in about 3.2% of probability for rate cuts, while 96.8% are pricing in for a hold at the current range of 5.25 to 5.5%. The case remains pretty much the same for the June and July FOMC. Until September, we see a material increase in the probability, nearly half on hold and half on cut. In other words, our focus this Thursday won't be the decision itself, but rather the Fed press conference 30 minutes after the decision. We want to focus on how the Fed sees inflationary pressures and its policy path. So Jerome Powell's rhetoric will be the key focus on Thursday. And now, speaking of inflation, the de-escalation in geopolitical tensions in the Middle East may be a relief, as crude oil prices seem to be trending downwards since last week, with the WTI crude down to $82 per barrel and the Brent crude also down by about $2 per barrel. So there is still hope of dovish remarks that may further cool off the dollar and benefit risk assets such as US equities and other major currency pairs.
Mm-hmm. Okay, great. Glenn, thank you so much for your insight. We've been speaking to Glenn Yin, Head of Research and Analyst at AETOS Capital Group, and this has been Biztech Asian Midday Market Watch. I am Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will be on our syndication partners' TV stations, radio stations, and websites. Remember to like and subscribe. Thanks for tuning in.